Lance Roberts with 3 minutes on markets and money. Let's talk about markets because, well, that's what everybody wants to know. I mean, last week as we rolled out of the July 4th holiday, markets were hitting an all-time high, which, is great, except what people tend to forget is that during the month of May, the markets actually had a big decline. The month of June, which was touted as the biggest June in like 80 years, which was true, actually only just recovered what was lost in the month of May. So really over a 2-month period, markets didn't go anywhere. But in the month of July, we did break out to new highs. Now, that is something that we've seen before. Back in May, it was an all-time high. September of last year was also an all-time high just before the markets corrected. But the issue is what's driving this momentum in the markets currently? Has it been one of real strength? This rally, while great, has certainly been on lighter volume, and it's also been a concentration more in defensive sectors, things like healthcare, utilities, staples, things that tend to perform better during weaker environments and when people are expecting weaker outcomes for the markets. In the short term, though, what we're watching most closely is what's happening with some of these conditions in the markets. First, take a look at what's happening with fixed income. Fixed income has been rallying to all-time highs. This is a chart of TLT, which is the bond proxy ETF, and it's actually been pushing up higher as money, again, rotating in this defensive type mode. But despite that, markets have been rallying. Now, this is an overbought, oversold indicator of the markets. And what you'll note here is that when markets get extremely overbought, it tends to be where markets peak. And of course, this is a daily chart, and currently right now, markets are more overbought than they have been at most times in previous history. But it's not just daily. If we take a look at the weekly chart, weekly is back to now overbought conditions once again. The last time we were this overbought was just prior to that sell-off in December. Prior to that was back in October of last year. So markets can only move so far in one direction before they kind of have to correct to some degree to allow for the next advance. And if we pull this out to a monthly view as well, we see the same thing. Markets are back here to extremely overbought conditions. It doesn't mean the markets are going to crash, but it certainly suggests that this recent rally to all-time highs, again, this is a chart going all the way back to 2009. You take a look at when markets have been this overbought, they typically lead ultimately to a correction of some magnitude. So it doesn't mean it's going to happen right now, immediately, next week. But we've got a couple of things going forward here that we certainly need to be aware of. Earnings are going to be weaker. Now, while we've lowered estimates enough to allow companies to beat those earnings estimates, pay attention to what they say coming up. Also, the issue with trade. Not likely to have a trade agreement anytime soon. Ultimately, that's going to be a problem for the markets because those trade tariffs that exist currently are going to continue to impact earnings for companies, especially in the manufacturing sector. Again, markets are doing well right now, but we're moving into 2 of the weaker months of summer. So be a little bit more defensive, have a little bit of extra cash, hedge your portfolio a bit, and you'll be fine. We'll keep you updated right here at 3 minutes on Markets and Money. I'm your host, Lance Roberts, realinvestmentadvice.com.